Your paycheck was designed to hide your taxes. That is not a cynical reading. It was the stated design goal. And one of the economists who helped build it spent decades regretting it. Before 1943, Americans paid income tax in a lump sum, once a year, out of money they were already holding. And they felt every single dollar of it. Start with how small American income tax used to be. When it was introduced permanently in 1913, almost nobody paid it. The thresholds were set so high that it applied to the wealthy only. Economists at the time called it a class tax rather than a mass tax. In 1940, around 7 million Americans filed a return, out of a population of over 130 million. For most people, income tax was something other people paid. Then the United States entered the Second World War. War is astonishingly expensive, and it needed paying for immediately. So Congress lowered the thresholds dramatically. By 1943, over 40 million Americans owed income tax. The class tax had become a mass tax in about 3 years, and that created a problem nobody had planned for. Millions of ordinary workers now owed a large annual bill, paid in one lump, out of savings they mostly did not have. A factory worker earning weekly wages was expected to set money aside for 12 months, voluntarily, against every human instinct. Predictably, enormous numbers of people simply could not pay. Compliance was collapsing before the system had really begun. The solution came from an unlikely place, a department store. Beardsley Ruml was the treasurer of Macy's in New York. He had noticed something about how his customers behaved. People handled small, regular payments far better than large occasional ones. The store had known this for years. It is why installment plans existed. So Ruml proposed the same thing for tax. Take it out of the wage packet before the worker ever receives it. Small amounts, every week, taken automatically. The employer becomes the tax collector without being asked. There was one enormous obstacle to switching over. If withholding started, workers would be paying 1943 tax while still owing the whole of their 1942 bill. 2 years of tax in a single year. Politiquement impossible. So Ruml suggested something extraordinary. Forgive a year. Congress largely canceled the previous year's liability to make the switch. Critics said it was a giveaway to the wealthy, and they had a point. But worked. In 1943, withholding became law. The current Tax Payment Act. An American tax has worked that way ever since. Getting Americans to accept this required something unusual. The government did not simply announce the new tax. It ran one of the largest persuasion campaigns in its history. The Treasury commissioned Walt Disney to make a film about it. In 1942, Donald Duck appeared in a short called The New Spirit. In it, Donald is persuaded that paying income tax is patriotic. He fills in his return at the kitchen table and rushes it to Washington. It was shown in thousands of cinemas to tens of millions of people. Irving Berlin wrote a song for the campaign. It was called I Paid My Income Tax Today. That is the level of effort required to make people accept a visible tax, which tells you something about why withholding was so attractive. You do not need a Disney film for a deduction nobody sees. Now, the part that matters, which is what it did to perception. A dollar taken before you receive it does not feel like a loss. It never entered your account. You never held it. So your reference point silently becomes your take-home pay. You budget around the smaller number, and the larger one becomes abstract. Ask most people what they earn, and they will tell you the net figure. Ask what they paid in income tax last year, and most cannot say. That is not stupidity. It is exactly what the design achieves. Compare it to a bill that arrives once a year for the same amount. Same money, completely different. Political experience. One is a number you never see. The other is a check you have to write. One of the people who worked on this later said so plainly. Milton Friedman was a young economist at the Treasury during the war. He worked in the division that helped design withholding. Friedman went on to become one of the most influential advocates for small government in the 20th century. And he wrote about this episode in his memoirs. He did not apologize for it as a wartime measure. He thought it necessary. What he regretted was what it made possible afterwards. Because withholding did not just collect tax more reliably. It removed the moment where a citizen feels the cost of government. Take away that moment, and raising tax becomes politically cheaper. Friedman's view was that he had helped build a more efficient machine without thinking about what would be done with the efficiency. And income tax is not even the best example on your own payslip. Look further down at Social Security and Medicare. Those are payroll taxes, and they're split in half. You pay one share. Your employer pays the other, which sounds like your employer is carrying half the cost for you. Most economists think that is not what happens. An employer decides what a role is worth in total. Wage plus taxes plus everything else it costs to employ you. If their share of payroll tax rose, the wage offer would adjust down. So the employer half is widely thought to come out of wages anyway. It is simply taken before the wage is ever quoted to you, which means there is a tax you almost certainly pay that never appears on your payslip at all. Not hidden illegally, just structurally invisible. The same design principle applied one layer deeper. There is a modern version of this that is stranger still. Most American filers do not owe money in April. They receive a refund, which sounds like a gift and is treated like one. Refund season is a genuine retail event in the United States. Advertising is written around it. Big purchases are timed to it. But look at what a refund actually is. It means too much was withheld from your wages all year. You lent the federal government money every week without meaning to, and they returned it 12 months later with no interest. That is the only loan most people are delighted to make. And they're delighted because they never experienced it as lending. Most rich countries withhold tax. America is not unusual there. What is unusual is that Americans still have to file a return at all. In Britain, most employees never file anything. The system withholds the right amount, and the year simply ends. Japan, Germany, and much of Europe work broadly the same way. The tax authority already has your wage data from your employer. It has your bank interest. It knows what you owe. So in those countries, it tells you, and you confirm it. That is called return-free filing, and America has repeatedly considered it. Pilot schemes have been run and shown to work. They have not become the norm, and the reason is not technical. Tax preparation is a large American industry. Companies that sell filing software have lobbied for years against the government offering a free automatic alternative. That is a matter of public record, not a theory. So Americans pay tax invisibly, then pay again to work out what they paid. None of this means withholding is wrong. The lump sum system was genuinely failing, and it failed hardest on the people least able to save a year of tax in advance. Withholding made a mass income tax administratively possible. Everything funded by that tax exists partly because of it. Roads, defense, pensions, healthcare programs. You cannot run a modern state on money people mail you voluntarily. The criticism is not that it collects tax. It is that it hides the collection. Those are separate questions, and they get argued as if they were one. So look at your payslip again. There is a gross figure, and there is what actually arrives. The gap between them is the most successful piece of behavioral design in the history of American public finance. It was built in wartime by a department store treasurer to solve a collection problem, and it solved it completely. It also quietly answered a question nobody had asked. How much does government cost you? The answer is on the payslip. It is just not the number you look at. You can think tax is too high or too low or about right. That is a genuine political argument, and this video does not settle it. But it is a much better argument to have with the real number in front of you. So find your gross pay and find what actually landed in your account. Sit with the difference for a moment, because almost nobody ever does. Whatever you conclude, you will be arguing about something you can see.